It's all about having the key insights, following the leaders of the crypto industry and background stories on blockchain technology trends to keep you one step ahead. Monty Metzger, CEO of LCX.com, keeps you up to speed with what's moving global crypto markets and gives you the latest insights about LCX's platform and ecosystem. This is LCX Insights Live.
Welcome, welcome, welcome. This is another LCX Insights Live. I'm excited to welcome you on this Sunday, the 18th of July, 2021. And in these live insights shows from LCX, I'm engaging with the world's top blockchain projects and entrepreneurs, investors, and pioneers in crypto and blockchain in honest conversations meant to challenge traditional ways of thinking. My name is Monty Metzger, and I'm founder and CEO of LCX. LCX is a regulated fintech company that focuses on digital asset trading, compliant token offerings, and tokenization. LCX received 8 blockchain-related approvals by the Liechtenstein regulator, more than any other company in the country. And Liechtenstein, as you know, is a country next to Switzerland and Austria in the middle of Europe. And the country has received a AAA rating from Standard & Poor's. That's the highest country rating you can get. But even more important, Liechtenstein has introduced the most forward-thinking legal framework for cryptocurrencies and blockchain companies, providing legal clarity and security for LCX users. But today's show title is all about Hedera Hashgraph, building the trust layer of the internet. And today's guest is the inventor of the Hashgraph distributed consensus algorithm and is the co-founder and chief scientist of Hedera. With over 20 years of technology and startup experience, he has held positions as a professor of computer science at the US Air Force Academy and as a senior scientist in several labs. He has been the co-founder of several startups, including 2 identity-related startups, both of which were acquired. He received his PhD in computer science from Carnegie Mellon University and has multiple patents and publications in peer-reviewed journals and conferences in computer security, machine learning, and mathematics. So nobody else could be better here on the show. So please welcome with me, Mr. Dr. Leemon Baird. Where are you? Here you are.
Here I am. Thanks a lot. It's wonderful to be here with you. Thanks.
Yes, we are honored that you're spending your Sunday with us, and the community is excited as well. We invited the Hedera community as well as LCX community, and there is an opportunity also that everybody can send us their questions. So at YouTube, you can comment there live. So we want your questions, and you can comment on YouTube, and then I can pick as a moderator here the best questions, and these will go directly to Leemon and me, and we can discuss this. The first couple of minutes we'll spend on a few elemental questions. So Leemon, before we get started into community questions, can you give us an update and explain what is Hedera? What is Hedera Hashgraph?
Sure. Well, Hedera, is a public ledger. It's based on the Hedera Hashgraph, which is a consensus algorithm in data structure, and it allows the computers to come to an agreement on the ordering of the times of the transactions and on their timestamps, and allows us to have these services. So we have the smart contracts, we have cryptocurrency, we have tokens at the native layer. So you can always do an ERC20, but you can also do it at the native layer. And then we have the consensus service. So you can actually build what would look like a private network, but use Hedera for the consensus for it. And so you get all the speed and privacy of a private network, but you have the trust of Hedera. So that's what we do.
Okay, that's exciting. But I think there's one elemental difference to a lot of other blockchains. So basically, what I heard is, or what our technology team also told me is, it's not a blockchain. What's the key difference here with Hedera to other blockchains that distributed ledger technology?
Sure. So the word blockchain can mean a distributed ledger technology, in which case we are one, or a blockchain could mean a chain of blocks, in which case we aren't. We're actually better, different in some ways. So it is a directed acyclic graph. You may have heard of DAGs. That's the data structure that it uses. And what it means is that every single full node can be creating the equivalent of blocks many times a second. They don't have to take turns. You just all create them at the same time. And then it gets put into order and none of them are lost. And so that's the difference. With a chain of blocks, you might have to take turns on who puts the next one. But with this, everyone is creating blocks at the same time and they just all get put into the order. And there's no stale branches you have to chop off. So that gives you some high speed, and it also maintains this asynchronous Byzantine fault tolerance. So it's secure.
Okay. And now what's also very important for the community to understand is when that Hedera gets started and how did you start it? In our last personal meeting, we sat together and you told me about the governance structure and how it all came together. Can you just briefly repeat that? When was Hedera founded and how do you do the governance now?
Yes. So the Hashgraph algorithm was cool. We started a company to do private ledgers, and then we said, let's do Hedera. Let's do a public ledger. But the key thing we needed beyond just a Hashgraph is the council. We wanted to have extremely trustworthy governance that is transparent. And so we wanted to have some of the biggest organizations in the world, big companies or big universities, top 10 universities, spread around the world on different continents, under different governments, on different, in different countries, in different markets, different in time even, all decentralized in that way that you can trust, that they're huge, they have a reputation to maintain, and then they're transparent. Every other month, they get together to make all the decisions, and the minutes are published. You can see what they are. And the way it's set up, it'd be impossible for them to do something evil without getting caught. And so we wanted to have these large organizations that you might not trust any single one, but you can trust them to keep checks on each other because they are spread out, so diversified, so decentralized, and then so transparent. And the transparency of the governance is really important. You know who they are, and you get to see what they're doing.
And like looking at this governance structure, how did who are the members? How did it all start? And how is it then a decentralized autonomous organization, or how is it managed in terms of the organization level?
Yes, so it is actually governed by the governors. Weird concept. The governing council actually governs it. So it makes the decisions of what features are going to be added. Now we have this Hedera improvement process where the whole community is suggesting features. And then when a feature is suggested, the whole community is debating it and adding inputs and deciding what it should look like. But then to the final decision on which ones will be implemented and in what order is done by the council. And the council sets the pricing on the transactions and decides what the rewards are for the nodes. The council is doing these things, and the council meets every other month. The minutes are published for the whole world to see publicly. And then the council has committees that meet every other week and are making all of these decisions. So the governance is actually done by a governing council that governs.
Okay, that's great. And you also mentioned when Facebook started Libra as one of the council members, and then the Libra Foundation was found, and you said, well, they actually did it a very similar way like you have envisioned it. But I think the key difference is nobody's talking about them anymore. It's really all about Hedera. So congrats on that development. But now, looking at the company and the organization, how many employees do you have? How big is the team at the moment?
We have around 50 employees. I don't know the exact number. There's our headquarters is in Dallas. We have a number of people here, but then we also have a lot spread around the world. So we have people in Asia, and we have people in Europe, and we have a number of people in California and in New York City. So we have just people spread around. And then that's just the employees of the Hedera itself. Then, of course, we have the member organizations, which are huge. The council members are huge.
So, and are there some numbers public also in terms of Hedera community and reach and usage? Are there also some KPIs you have published?
KPIs for usage, yeah. So we're looking at transactions per second, how we are used. Right now, we're being used more than any other ledger. We have 1.3 or 4 billion that we've processed already, real transactions, not test ones. So that's a huge thing that we look at. We're also looking at the number of users. We're looking at the council itself, as it is growing. It has 21 members. It's growing to 39. These are all KPIs that we look at, and they're tracked. You can go to the websites. You can see those things.
Great. I think that the usage really and the way you have evolved as a blockchain or decentralized ledger technology is really outstanding, especially given your governance model where everybody has not only some interest but some stake in Hedera. So that's why they want to make it a success. I think that's from an outside perspective. From my perspective, I think one of the key USPs of Hedera. But now, like when you look at how people are actually using Hedera today, there are some, like, what are the most exciting ways, and how do you see this evolving?
I love this. So what we are seeing is the world is moving to things like tokens, tokenizing things, and markets for tokens, and DeFi things that are based on this. We are also seeing people use it to record facts. So you have recording the provenance of vaccines for COVID, or recording hashes of things that prove that Holocaust survivors are recording their recollections, and you're being recorded for eternity on that. Or people are recording coupons so that you can't spend a coupon twice at 2 different stores. Coupon Bureau is doing that. Or they're doing AdStacks is doing advertisements are being recorded through it. And so you have this immutable eternal record of what has happened, but you're doing many, many times per second. You can be recording these things. And so we have tokens, we have markets, we have recording facts, provenance, all sorts of things.
Great. So more and more usage also driving kind of the overall growth of Hedera, Hashgraph. And I think these exciting showcases really illustrate that it's not only a theory or a vision, but really you've put it into practice. So, but there's something which is called this green ledger. So what does it mean to be a green ledger, and what are some of other parts of a green ledger, green ecosystem that you think DLT needs?
Yeah, so green is a broad thing. One thing you want for green is to have a small carbon footprint. You just shouldn't use very much electricity. And Hedera doesn't. It's due to the nature of not being proof of work that it uses a very small amount of electricity. I saw one published report that somebody had done had said 1/5 millionth of what Bitcoin uses, and even like a tenth of what credit card companies use per transaction. So very little energy per transaction. So one thing about being green is don't have a big carbon footprint. Another part about being green is have offsets, carbon offsets, buy carbon offsets so that your net carbon footprint is negative. And we have done that. So we buy carbon offsets so that our network is carbon negative, not even carbon neutral, but carbon negative. And we started doing that this month, and we are already carbon neutral now, or carbon negative. And so it is good to buy carbon offsets to be negative. What's even better is to have less of a footprint to offset in the first place. And so we're doing both of those. But those two aren't the only things that matter. What also matters is who is building on top of you to accomplish green things. So for example, you could talk about how do you have a market for energy when people are doing things like renewable energy, like you put a solar panel on your roof or a windmill in the backyard. How would you be able to sell that energy to other people? So you want to have a market for the energy. And there are people building that on top of us. Or you could have a market for the carbon credits. And people are building that on top of us. You can buy and sell carbon credits. You tokenize them. What's cool, though, is that when you have a ledger that's very fast, you can start doing new kinds of things that haven't really been around before. You could do carbon credit trading and energy trading merged together. And you could attach them to each other. And so that as you buy a kilowatt hour of energy, you're also buying the associated carbon credits so that you're neutral or negative at the moment you're buying it. And so people are setting up markets to do that on top of us. So there's all sorts of interesting green things being built on top of us that we are enabling. And I'm excited about that as well.
Yeah, great examples. Yeah, really, like first of all, your advantage in terms of being a green ledger from start. So Elon Musk can't complain about this. And then also like all the showcases, of course, very, very critical. But now if you look at the current industry, how do you see the industry developing and maturing over time? And so what are key signals you are looking for at the moment?
I am so excited about this industry. For years, people have been saying, I think the whole world is going to end up using it. We're off in the Wild West right now, but I think the whole world is going to use it. 2021 is the years that all those people have been shown to be right. 2021 is really a turning point, I think. We are seeing the real world knowing about ledgers, cryptocurrency, tokens. The real world has big businesses now using these things. We have individual, just ordinary users that are aware of these things. For many years, many people have been saying, someday we're going to change the world. This is the year where it happened. And of course, an exponential curve, in some sense, every year is the year that it happened. But I think history is going to look back at 2021 and say, this is really where the turning point, where the curve of that hockey stick occurred. We are seeing all of these people that have been on the sideline for so many years saying, well, we have a blockchain group in our company and they're keeping tabs on it. Someday we might do something. This is the year where it's happening. And so we're seeing these recording of provenance type things to keep track of, vaccines to see if they've been cold the whole time, that sort of thing. We're seeing DeFi things based on these tokens. We're seeing people tokenize things that had never been tokenized before. Spencer Dinwiddie is tokenizing his shoes and selling them. It's just amazing. Or time, he's helping people tokenize their own time. Hey, you want to buy a token? Then you can spend some time and have lunch with me. That sort of thing. He's helping people do that. This is the year where we are really seeing our industry start to take over the world. And I do believe that we are on a track where not everything will be done on a ledger, but every part of the world will use ledgers. Every part of the economy will have ledgers doing at least some part of it. Every part of society will have ledgers doing some part of it. This is the track that we're on. It's like, where's the internet used? Well, for everything. Not everything happens on the internet, but every part of society uses the internet for something. This is where ledgers are headed.
That's right. So I couldn't agree more with the Internet of Information, like started in the 80s, 90s. Now with the Internet of Value, everything will be tokenized and every financial system will be some form on the blockchain or like using some of the technology for sure. And also what you're saying, that being the tipping point, with now 100 million users or so globally, we're still at the early stages, but still we have a momentum going where nobody can ignore it anymore. All the organizations, also your kind of governance vendors, are investing heavily into it. And this will now come into play. When I look at your website, you're writing that you're the third generation public ledger, like the first generation describing Bitcoin, second generation Ethereum, and then there's Hedera HBAR. So why is it the third generation public ledger?
Yeah, so there's several things that are fundamentally different. It's fundamentally faster. So right now we have throttled it down to 10,000 per second, and it really is able to handle 10,000 per second, which is far more than the usage. The usage keeps growing, but it's not close to 10,000 yet. And we'll just raise that limit when we get close to it. So when usage gets close to 10,000, then we'll raise it to 20,000 or whatever. We'll just keep raising it. The latency is low. There's been a huge number of questions in the chat about latency. Yeah, the latency's gone up recently, and so next month we're going to change some settings. It'll go back down. You'll see it. I think you'll see it drop in a couple of weeks when we do our August update. So latency will go back down. What we have always tried to do is keep the latency end to end, including the mirror nodes, to be under 10 seconds. This is what the exchange told us that they needed, and so we've always tried to do that. For the throughput, we've always tried to keep it to be at least 10,000. That's way overkill at the moment, but we've always tried to keep it at least that. And we're always putting our effort into where we need to keep these things. So if we add a feature and it slows down the throughput, then we put some effort until throughput goes back up to 10,000. And if the end-to-end latency of the network plus the mirror nodes goes over 10 seconds, then we put some effort into bringing it back down. So I think next month you're going to see it go down some. This is something that we just try to keep reasonable. But That still is better than 1 hour latency for Bitcoin. If you have a new block every 10 minutes and it takes 6 blocks for you to have some confidence, that's a difference. But it isn't just the speed. It's also things like finality. So, with a Bitcoin, you never really know. It's just maybe after 6 confirmations, you feel pretty good, but you never really know. With us, it's a mathematical guarantee. If less than a third of the nodes are malicious, then you have this math guarantee that you have reached finality within a few seconds, and you will never change your mind. The network is guaranteeing to you will never change its mind. That's the asynchronous Byzantine fault tolerance. And that really is important. The ledgers this year are starting to become really a foundation for the world. The real world is now using ledgers. This is the year where that's happening, which means now you have to start caring about things like finality and speed and the math proofs. The fact that it's asynchronous means it also works in the face of DDoS attacks, and it works in the face of partition or firewalls that are doing malicious things, all sorts of malicious attacks. These are important. So you need real math proofs that you're ABFT. We have that. You'd like them to be checked by a computer. We have that. Professor at Carnegie Mellon actually did a COQ check of the theorems to prove it really is ABFT. And then the third thing that really distinguishes us is the governance. It is so important to have real governance of exactly who these people are, that they are big, and that you can't just bribe them for $1 million to do something malicious. They have a reputation to care about, and if they ever did anything malicious, it would be seen. It is transparent. And so those are really 3 things that distinguish, I would say.
And now currently, you have pointed out that the trust layer is super important. And, in math, we trust in a way. So we don't have to trust a counterparty, but rather trust the system. And that's why our topic of today's show, building the trust layer of the internet, is really kind of an important aspect in blockchain overall, but especially here with the examples you mentioned. But talking about one more time about the governance aspect of it, what are the most important aspects of governance, of your opinion?
Yes, I think it is important that you're distributed. You're not all in one country. It needs decentralized. It is important to have transparency, which means we know who the governors are. We know everything about them. They have a reputation to protect, and you can see if they do something bad. They're not just going to take $1 million bribe and do something bad. They would not consider it worth it. Big organizations like Google and LG Electronics and so on. It is also important that the governors know what they're doing. So we have governors that are, the oldest bank in South Korea and the biggest bank in Africa and a huge payment service, FTPOS, in Australia. They give us advice on these things. We have Chainlink, who gives us advice on the whole blockchain world. We have one of the largest law firms in the world, DLA Piper, that gives us advice on the law and the legal and tokenization. They are really into tokenization in really cool ways. Avery Dennison is really into cool tokenization things. So what we get is the advice from these large organizations that know what they're doing and are deeply into these things. We have a bunch of telecommunications companies. Biggest telecom in Europe is DT. We have all sorts of these, several big Indian companies. These are the kinds of things that build trust, along with the transparency, publishing the minutes when they talk every other month, and all of that. I think that's really critical. This is truly what decentralized governance is. It isn't, well, whoever the developers are, they just kind of end up being a small group of developers that sort of have the unofficial power. That's not what we really want as we start to move ledgers into the real world. You really want to have more decentralized and more trustworthy than that.
But so there's the kind of decentralized governance structure in terms of how to manage the company and make major decisions. But there's another challenge, which is how to keep the platform fully distributed over time. What are your thoughts on this? Yeah.
So to begin with, you want to have nodes on all different continents, not all in one country, like some ledgers have, or used to. Maybe half of them got shut down. But what you want is you want them to be distributed. So right now we have nodes on every continent except for Antarctica, and maybe we'll have that someday. Maybe we'll have one in space someday. I don't know. I would love that. I love Starlink. It'd be cool to have that, running a space node. or the moon or Mars would be interesting. Although latency there becomes interesting. You can do it, but they don't really help the network in some way.
Right.
But you can do that. So it is important to have that. Then secondly, you absolutely have to have trust that you're going to have less than a third malicious at any given time. Less than a third will be run by someone evil, or less than a third will be hacked into by a hacker. You have to ensure that. And so what we've done is we have this path to decentralization. There's a whole 1 hour talk on that. And so what you do is you start with the council members that you trust running the nodes. And so we have 21 council members running these 21 nodes. You have that. Then the next step is you start to have further people that aren't council members, but are permissioned, that are trustworthy by the community. And so you start having community nodes that are known. And then the third step is you go to anonymous nodes. So it's totally permissionless and anybody can join. And I know it's a little while ago, there was a question in the chat about, well, how would you end up doing decentralized community nodes? You know, how many HBARs do you have to stake, that kind of thing. And it would be something like that. You'd have to stake, you'd send it in a transaction saying, I want to be a node, and there'd be rules about how you do that, and then anyone could become a node. And we'll give more details about that as we get there. You know, there's lots of things that you can adjust on that. But that's how that final step will be. And so we have this process of becoming more and more decentralized. But what we have right now is nodes on every continent, except Antarctica, and being run by trusted people and growing over time.
Great. Yeah, I think the distribution here, really, you're doing it as a role model here. Now, just to explain to the community, there might be a lot of new users who are watching this. There are two key services which you offer, and one of them is the Hedera Consensus Service API. What is the Hedera Consensus Service API?
So this one is interesting. It's sort of not a service. It's a way that anyone can build any service they want at the native layer. So this is interesting. Normally in a ledger, you have something like smart contracts, and we have that, Solidity smart contracts. You can write anything you want. It's Turing complete. You can make it do anything. You can do ERC20s and ERC 721s and ERC things we haven't even thought of yet. But because it's a layer above the bottom layer, it ends up being slower and more expensive and not as good, which is inevitable, which is why we added tokens, for example, at the bottom layer, at the native layer, so that your tokens can be incredibly fast and incredibly cheap. You can transfer a token for 1/10 of a cent. You can tokenize $1 million art piece and sell it to someone and transfer it to them. And for that $1 million transfer, your fee is 1/10 of a cent. Okay, that's great. And that's because it's at the bottom layer, so it's fast, and anything that's fast can be cheap. Anything that's inherently slow has to be expensive. It's just kind of the way economics works, because your fraction of the computer is bigger. With the consensus service, though, you don't have to wait for us to decide which things should stay at the higher levels and which ones can we push into the bottom layer. You can write anything you want. And what you do is you write your own little network. You create your own network. So maybe you build it on Hyperledger Fabric. Maybe you build it on EEA. Maybe you build it on Corda. You can build this other layer using any of those three technologies, or just create your own. Have a bunch of computers that talk to each other. And they work together to maintain a state and to process transactions and to update that state. Then, at the bottom layer, you plug in a connector to Hedera. So we have plugins for Hyperledger Fabric and for EEA and for Corda, where everything it's doing, every single transaction flows through Hedera. And it is Hedera then that puts them in order and gives each one a timestamp that is a consensus timestamp, and sends them to the mirror nodes, and they're staying forever with the timestamp and with cryptographic proof that the ledger as a whole reached consensus on it. And so you can go to a court and you can say, hey, this transaction really did go through at noon on Tuesday. Here is my cryptographic proof that Hedera as a whole agreed. But because you've done this on this side network that you've created, it's not really an L2. It's almost like an L-1. It's a weird kind of thing. It's like the opposite of an L2. Because you've done it on this separate ledger, you have incredible speed. Those computers are only doing your application, nothing else. And you could have total privacy if you want. You could encrypt every single transaction. The world would would see that some transaction happened at noon on Tuesday, but have no clue what that transaction was about. You can have total privacy. You can have total speed. You can write your code in any language on earth, whatever you want to use. And if you're going to use something like Hyperledger, it can be any language Hyperledger supports, which is lots of languages. Or you can just write your own, do whatever you want. So this is the way the consensus service works. And it's the it's the thing that everyone should do, because it lets you decide to put things at the native layer on your own without us having to do it. The only requirement, though, is that you have to have a super fast central computer, not central computer, central ledger. So the L1 ledger has to be very, very fast. The whole point of L2s is to make up for the main ledger being slow, where you offload all the work to that. This is the opposite. It's taking advantage of the fast speed of the central ledger. And so, like I said, we can go up to 10,000 right now. When we start getting close to 10,000, we'll raise that up. And if we eventually get to the limit of what the laws of physics and the internet allow for a single shard, then we'll go to multiple shards. But the goal is to keep the L1 so fast that you can build these app nets that are the opposite of an L2. That's the idea.
So you mentioned that different layers, layer 1, 0, 1, and 2, and everything has to harmonize in a way that you have an efficient system. But you also mentioned that there's an enforceability on token level. So there's a proof which you can enforce in court. There's a key difference. The reason why we went to Liechtenstein is because of the outstanding legal framework, which gives legal clarity. And they are not only regulating one piece of the puzzle, like giving an exchange license, but they're rather looking at the whole value chain of tokenization, of token creation, with a role called token generator, with a role called token, the identity service provider, the price service provider. Then there's an exchange service, but also custody roles and so on. So very interesting aspects of the whole value chain of tokenization. And the most important thing is if you issue a token under the Liechtenstein laws, you actually have the right to go to the court over there and enforce your right, because the token is a legal tender, and that's accepted at courts. You can actually go there with your hash and say there's a transaction hash, and you can enforce it at the court. So that said, like the whole compliance and regulatory landscape is completely changing since you started Hedera. What's the importance of regulation and compliance at the moment for you?
I love what you are saying. So Hedera doesn't do anything. It's just plumbing. Just like the internet doesn't do anything. It's just plumbing. If there's no apps on top of the internet, who cares that we have routers that can send bits back and forth across the planet? And if you don't build anything on Hedera, who cares that it's 10,000 transactions a second? What's a transaction? It doesn't do anything. And so the only way that Hedera is useful is when you build things on top of it. Hedera is just a foundation. People love to move into a house, but you won't move into a house if there's nothing there but a concrete slab with plumbing and electricity. You have to have a house on top of your foundation. And so what does that mean? It means we support tokens in ways that will let you do whatever you want, but you need to do something with it, right? We're just enabling whatever you want. And when you do the whatever you want, you have to worry about regulations, and you have to worry about markets, and you have to worry about getting people to understand it and to use it, and you have to worry about the user's interfaces for what you're doing. All those things are the house on top of the foundation. You might have to worry about identity, and people are building identity on top of us too, whole layers of identity things, which becomes very important. All of these things are built on top of the foundation. A foundation doesn't do anything by itself, and Hedera is just trying to provide a trust layer, and trust doesn't do any good unless you have something to trust in. Yeah. And so what you are talking about is where all the real value lies. We're just trying to help you do your thing, but all the value lies at the next layer up.
That's right. And I mean, the trust layer, if you build it, but nobody accepts it, and if you then go to court, you have a legal case and say like, okay, sorry, like we don't know this blockchain thing, it's not accepted here, then it would be useless. But now there's a small country in the middle of Europe who plays out being a kind of a role model in terms of this legal framework. And we now see that the ESMA, like European regulators, are copying a lot of these aspects. We see that aspects are now discussed also on United Nations level, as well as on United States, in the US. So a lot of regulators are looking at that, publishing guidelines. So I truly see that there's a huge future of tokenized asset and tokenization. And there's a particular, that's also where our visions collide a lot, because that's how LCX got started. We've now built a regulated infrastructure to build the LCX exchange as a cryptocurrency exchange. We're now starting tokenized diamonds as a first project to show proof of a physical and digital world, connecting these both things, and like putting 100 diamonds in a vault and then issuing NFTs. And so this is something which we have announced and now coming out very soon. But there's something where you have also put a lot of effort in, and that's called the Hedera token service. So again, showing the website here. Leemon, can you explain what is Hedera token service?
Sure. So the Hedera token service is a way that you can create tokens on Hedera. You can create fungible and non-fungible tokens on Hedera. When you create the token, you can set up the rules for it. If you set it up with no admin keys or whatever, then it will forever be its own thing and you can't interfere, and people can trust you'll never interfere. On the other hand, if you want to, you can set it up with admin keys and things. And when I say an admin key, I don't just mean a single public key. I mean, you can set up really complicated things. Like you could have 10 keys, and if any 5 of us agree, then it happens, or any 2 of us, or any 10 of us agrees, it will happen. And you can set up hierarchical ones. You could say, well, our organization really has 3 main parts, and each of the 3 has to agree. And for each of the 3, it has to be some fraction. Or you say, well, any 2 of the 3 parts have to agree. And then for 1 part to agree, it has to be a majority of the people in it. You can set up really complicated things like that, which is what we mean by a key. And then your admin key can have various powers that you set up when you create the token. If you want to give no powers at all, you can do that. And then it's guaranteed there will never be any powers. Or you could have the power to mint, and new tokens can be created and burn, and then tokens can be destroyed, or even remotely wipe someone else's account. Maybe you don't want that, in which case you can set it up where it's impossible and it will stay impossible. But maybe you do want it. I've given an example. If you maybe were using tokens you give people that give them access to your house, you might eventually want to say, okay, that friend, I don't want to have a key to my house anymore, and revoke their token. If you set it up that way, then you will be able to, and the whole world will know that you set it up that way. On the other hand, if you tokenize diamonds, I love that application, and you sell me a diamond token, I don't really want you to be able to remotely wipe my diamond token. So you can set it up that way, and then you'll never be able to gain the ability to remotely wipe my diamond token. You have the power to set it up. Again, like I said, we're just the plumbing. You can set up whatever you want on top of us. All the real magic happens 1 layer up, which is what you're doing. And let me just, again, say how much I love things like the diamonds. I can, I guess, go to a diamond store today and buy an expensive diamond. But I have to go to a store. I have to look at diamonds. I don't know anything about diamonds. I have to pay for it there at the store. How would I sell it to someone else? I guess I'd have to hand them the diamond, but then they have to go get it appraised to see if it's any good. It sounds horrendously slow, and it is. But if you can tokenize them, then we could just do instantaneous transactions where I give you money and you give me a diamond and it happens instantaneously. We don't need a trusted third party in the middle between us taking a cut. We can just do it. Our token service lets us do that. You do it in seconds, and it's, it's a 1/10 of a cent to do it. Or you can set up these tokens. If you create a token, you can set it up, or we'll be able to soon. It's one of our HIPs, Hedera Improvement Process recommendations. You can take a fee, and you could say every time a diamond transfers, a certain fee automatically goes into you. You can set this up, and it's transparent. Everybody sees it, and they can know that it won't change in certain ways. Or you can even do more complicated things with our token service. You could say, well, I'll give you a diamond token if you'll give me a gold token, and we swap. And even if you're a stranger and I don't trust you and you don't trust me and you don't know me, we are guaranteed that you don't get the diamond unless I get my gold, and I don't get any gold unless you get your diamond. It's atomic. And we can have multi-way ones. I give you a diamond and you give Alice some gold, and Alice gives me some HBARs or a stable coin or whatever. And then only if the whole triangle works does it happen. It's atomic. And you can set up really complicated transactions like that. And it's a single transaction running at 10,000 times per second at a tenth of a cent per transaction.
And I think that's why the Hedera token service really matters, because it's the infrastructure, as you said, the foundational layer to actually enable this growth of tokenization, of bringing all these assets on chain in a very simple manner, whether it's permissionless or permission-based, whether it's like in a closed ecosystem within companies or open. So I think that's really outstanding. And in terms of future of tokenized assets, it might play a really essential role there. So I'm just repeating here on the community side. You can drop all your questions here. We will now get started with the first questions of the community. So, and before we do that, one last question to you, Leemon. How do you see the importance of tokenized assets and the future of tokenization?
Oh, this is a big deal. So I think that ultimately pretty much everything of value will end up being tokenized. It just makes too much sense. It's the same way that we used to do record keeping on paper, and it eventually all moved to computers just because it made sense. And we used to send information back and forth by mailing these shiny disks through the mail. How weird. Now it's all just over the internet. In the same way, ledgers are going to end up tokenizing everything. What that means is traditional assets like stocks and diamonds and artwork are all going to be tokenized. But in addition, people are going to start tokenizing things that have never been tokenized before, like your own future revenue. You know, Spencer Dinwiddie is doing that. That's going to be tokenized. People are going to be tokenizing things like a kilowatt hour of electricity combined with carbon credits to offset it, glued together. People are tokenizing that. People are going to be tokenizing complex derivatives and futures and sorts of things. All of these things are going to be tokenized. Things that haven't been tokenized before. Spencer had tokenized the ability for people to influence which shoes he wears at the next game. You know, this is not something that has ever been a market before. And so the ability to tokenize things and to send little tiny fractions of a value. I didn't even say that about the diamonds. Maybe I could buy a cup of coffee with a millionth of a diamond. You can't do that today. If I have a diamond, I can't really go to Starbucks and hand them a millionth of a diamond. But you can do that with tokenization. It makes so much sense, so much reduction in friction, so much reduction in time, that I think that the whole world is going to do it. And I think this year we have already seen that the big financial Wall Street has decided, yeah, this is the year when we're actually pursuing this. And the time is now.
The time is now, really. And given your international framework, I think another aspect of tokenization is really then you're unlocking the global markets, because you could have done like sharing an artwork, but it would be very local or limited if you're just doing it on paper. But now it's really becoming a global market. And that's also a key challenge now of regulatory and compliance aspects, because while we are in the small country of Liechtenstein, we are targeting a global market from day one. We have users from 130 countries. It's really a challenge to be compliant in a way with that. But given our high standards, we are pushing the boundaries of what is possible. I see that there are a lot of questions coming in on HBAR, and that's another kind of key element which you should explain. What is HBAR token, and what's the role within the ecosystem?
Yeah, so the HBAR token is the fuel for the network. If you want to do a transaction, you pay for it in HBARs, right? Every ledger works that way. Every ledger has to have a cryptocurrency that you use to pay for the transactions. That's kind of the base purpose of it. In addition, it is something that is limited. In 2018, we launched the network. We created a bunch of HBARs, and there will never be another HBAR. So it's a finite supply. So, you know, it has interest in the same sense that stamp collectors think there's interest because it's a limited supply. And so then we have that. In addition to that, HBARs are are, of course, they fluctuate in price, but our pricing is in HBARs, but it is adjusted so that in US dollars, it's predictable. And companies that want to build on top of us need that. And so we have that as well. In addition to that, you can have these atomic transactions that swap HBARs for tokens. And so, like I said, I could give you HBARs for your gold, or we could do this complicated thing where I give you some gold and you give Alice some stable coins and Alice gives me some HBARs, and we can do a triangle or a square or even bigger. So HBARs are the fuel of the network. And then in addition to all of that, it's proof of stake. Stake is HBARs, so it is the security of the network. Now, at the moment, we're highly permissioned, and so we'd have security anyway. But as we move down the path towards permissionless, the HBARs become more and more important. I have noticed a whole bunch of chat questions about, hey, how many HBARs can a node have? Well, the nodes are capped at HBARs so that they're all about equal. And over time, as we have more nodes and as we have more HBARs being staked to them or less being staked to them or whatever, we'll adjust what that cap is. But basically, the caps are to ensure that the nodes are all about equal because, well, if one node had all the HBARs, then a bad guy taking over that node now controls a third of the stake, and so that's bad. So we'll always keep it kind of spread out.
And there's actually a question in regards to the nodes from Kuze here. How many HBAR can a node have? What's the maximum amount?
Yeah, that's what I was saying. So they're capped at all being about equal, and that we adjust that over time.
Okay, then let's pick another question here from Harish Meha. What do you think, who will be the Hedera companions and competitors after 5 years in the concept of green?
Interesting question. So companions, we are more and more having people build on top of us, and we talk with them and help advertise them. So we have partners in that sense of all sorts of green companies. So we have companies that are selling us our carbon credits. We also have companies that are building carbon credit trading on us and energy trading on us, and there may be other things in the future. Also, this whole thing about provenance. You could say, well, if you buy some aluminum from somebody, aluminum is very energy intensive. Maybe somebody will build a system to keep track of exactly what energy was used to produce that aluminum. I could imagine things like that, where provenance becomes part of the green story that gets built on top of us. So there's lots of different kinds of things. So which companies do we want to partner with on that? Oh, that's easy. All of them. I want to partner with everybody. I think it's great for us to build a thriving green economy.
Let's pick another question here from Giacomo. Are you working on CBDC use cases? CBDC stands for central bank digital currencies.
CBDCs are exciting. Central bank's digital currency is when you have a token created by a country as its currency. It's funny, the US dollar really is mostly in the Federal Reserve System. It is ones and zeros in computers, but those computers only talk to other Federal Reserve banks and not the rest of the country. It's actually a separate system from what your bank account, which is also ones and zeros, but they're separate. The dollars in your bank account are different from the ones in the Federal Reserve. You could imagine a CBDC allowing the US dollar, the real one that the Federal Reserve manages, being on a ledger where everyone can access it and where you could buy cups of coffee at Starbucks using it. This is what CBDCs promise. And so there's a lot of talk going on, and I can't give specifics, but there's a lot of talks going on about CBDCs and ledgers. And you can do a CBDC directly on a ledger, like using our token service. Or you could do it slightly indirectly, using the AppNet and using our consensus service. Or you could do it even more separate, where it's a truly private network, but that's kind of useless unless you have bridges to someone else. So you use a bridge to Hedera. And we put a lot of effort into pushing bridges built as AppNets that use our consensus service. Bridges between their CBDC and Hedera, but also just bridges between other ledgers. Bridges are important, and state proofs in the future are going to be really important for doing communication fast between ledgers, and bridges will help with that. So I think CBDCs are incredibly important. What has amazed me is the degree to which lots of governments now around the world are saying, this CBDC thing is important. We need to do this because it lowers friction. Yeah. It will help our economy. I love that. Both little tiny countries and gigantic countries. US Congress is talking about this stuff. The whole spectrum.
That's right. Yeah. Like back in 2019, we hosted a special session at the Singapore FinTech Festival with central banks. And there had been more than 15 central banks attending in this workshop, which was together with the World Economic Forum on central bank digital currencies. And what was so surprising for me is that from big to small ones, from the Fed to like small countries, Costa Rica, South Africa, or Thailand, they all know a lot about central bank digital currencies. They are not newbies or freshies to kind of blockchain. They all know all the details, but they also have a big risk, and they have a lot of things to lose. So a lot of smaller countries, actually, they are embracing the opportunities now at the moment, because for example, in Costa Rica, already 45% of currency is US dollar. So if they would make a digital currency, it would be a very interesting model. But now what we are seeing is really China moving forward with that concept, and who knows how this will then engage with Hedera. There might be also some use cases around it. If you look into the future of Hedera Hashgraph, what are kind of the key product milestones and what's on your roadmap at the moment?
Yes. So our roadmap are some of the key features that we were talking about earlier. We have a pipeline of people that are saying they're going to be building on us, bringing a lot of TPS. So already we are the most used ledger. We're doing more transactions per second than any other ledger. Real transactions, not just tests. And really counting them as real transactions, not one transaction counting as multiple things. So if you do that three-way trade of coins, that's just one transaction. We are highly used, but we see an extremely high growth rate in that, which is important. I do not think that ledgers can fulfill their role in the world that they need to unless you have extreme speed. I also think that the future is going to be, our council will grow and get to 39. We will have more nodes. We are going to see all of those things. I also think we're going to see that the people building on top of us, we have some people in all the areas we've talked about. So we're talked about identity. We've talked about proof of action, proving things like provenance, or that you showed an ad on your website, or that a coupon was sent. We've talked about tokenization, which I just think is going to revolutionize the world. This is the year that it started. I think it will be looked back on, but there's a lot more to go. We're just at the beginning of tokenizing the world and the fundamental changes that we'll make to the world. And so I see that as part of the future. I see Hedera as playing a critical role in all of these areas and more. There are things that we don't even know about. So IoT, that's always been on the future and continues to be one of those things that lots of people say will happen someday. Internet of Things. When every little electronic device in the world are all talking to each other and communicating with each other and maybe doing transactions with each other, which involves sending value back and forth, which means tokens and cryptocurrency. And maybe they're looking up shared data, which needs to be proved, which involves identity and involves shared data that we know that everyone's seeing the same thing. Well, these are all ledgers. So maybe IoT is going to be starting to be influenced by it, and smart cities and smart cars and those sorts of things. That's a little bit further in the future. There's been a bunch of questions in the chat. Are you ever going to have a node in space? Yeah, I think we probably will. I think we'll have nodes on the moon and Mars. And I think the moon colony will have its own network that interoperates with us, maybe a separate shard. Same thing for the Mars base. These are the things that you can see coming in the future. Yeah.
So I think that's very futuristic, but now like breaking it down a little bit more on your current roadmap. So looking at Q4 2021 on your website, there is something called stacking rewards. Contribution to network security is incentivized. What's the stacking rewards at HBAR all about?
Sure. So that may be Q4. It may be later. This is talking about having people be able to stake coins, and you get rewards for that. And so we will be telling more as we have more decided. So the details haven't been decided. It may be Q4, it may be later, I don't know, but it's on the roadmap right now just for Q4. We have a lot of features that we just keep adding. And so sometimes we'll add a new feature we've never talked about, and then that will take one of the ones we have talked about and make it later, because you have to choose which ones you're doing. But I think it's going to be exciting. And absolutely, what we're going to see is a continual, steady rollout of new major things. Just like we added the consensus service. That wasn't there when we launched, but we added the consensus service later. And then we added tokens later. And now we're adding scheduled transactions. That's one I can talk about too. That's a cool feature. that you don't see on any other ledgers. And there's some really interesting things there. And there's other interesting features that you may see us adding in the future. Maybe the ones on the roadmap, or maybe we'll add something else first and push the ones on the roadmap.
Okay. We'll see. Scheduled transactions. That sounds great. I mean, that's something which we're so used to social media, like publishing something or scheduling a post, which will be then coming tomorrow, but I could not do this on Ethereum yet. So when we look at, as we kind of round up this session here, Leemon, I'm always asking my guests the one question, which is, what are the key 3 trends of the industry which do you think are important, and how do they apply to Hedera Hashgraph?
I see this industry this year has traction on real world applications. Not just a few things like CryptoKitties or something, but I mean where the real world is using it to make real world processes be fundamentally more efficient, faster, better for the user, disintermediating, all those things. I think that this is an enormous trend in our industry, and that Hedera is very excited to be part of that. I also see, related to that, the need for real speed, and the need for real security, and the need for real trust, meaning good governance. All of those together, we need to be able to scale. And so that's because it is now being used by the real world. We're no longer in the realm just of proof of concept applications. We're in the realm of real applications. And so you have to have the speed and the security and the governance. These are really important things. So that's an important trend that we're seeing. And then the third trend that I love, that we're right at the beginning of, is people coming out with applications that are new things. We're not just taking existing ways of doing things and making it faster. A wire takes days to go through, and now it goes through in seconds. We're not just doing that, but we're doing new kinds of things. I will sell you the ability to vote on what shoes I wear tomorrow. This kind of thing is new things we've never been thought about before. And the history of civilization shows that every time you can do something 1,000,000 times better, people suddenly find new kinds of things you can do. Steam engines were great. Internal combustion engines were just more efficient, more power per pound, per kilogram. This was just a qualitative improvement. But what did that improvement give us? It gave us airplanes. You couldn't really build airplanes in the age of steam engines because it was too little power for the mass. For just that qualitative improvement, that quantitative improvement led to new kinds of things being possible, like the Wright brothers building actual airplanes. This is the third trend, is that ledgers now are going to enable the world economy, the world social media, everything to do new kinds of things we've never even thought about before because they just weren't possible. So no one was thinking along those lines. All 3 of those trends we are incredibly privileged to be part of and to be on the cutting edge of at Hedera. It is just exciting to be part of that.
It is exciting, yeah. So the real world adoption, kind of speed and security, and then also kind of these new explosion of ideas and innovation, which nobody could think about, like tokenizing your time or something that I think that these whole concepts are completely new, but could create a complete new internet of or like economies of scale and fully decentralized and creating all kind of new business models. So with that, we could end up this session here, Leemon. I think that was very exciting looking at all these Hedera things. But I think today we have one more addition, one more thing. And there I wanted to show you something. Here, there's a picture. Do you remember what this was?
I do. That was so nice. You want to tell the world what that was? That was great.
Yeah, so that's where we met the first time together here. So in the background, there's this great convention center from the World Economic Forum. It's called the Annual Meeting of the New Champions. This was 2019. And it's this, I think it's Dalian, if I remember correctly. It's a massive, cool convention center. And there at one of these private rooms, we sat together 2019 and already discussed a lot of these things which we had been speaking on today. But now 2 years later, I really see this happening step by step. Like we are working on compliance, getting a good infrastructure set up for the future of tokenization and trading of digital assets. You're building the fundamental layer. So very, very interesting. So if you look back, what are the key things changed or happened since the last 2 years?
Oh, I love that. So you and I were at the Davos conference. We were talking and saying, both of us were saying that we had this vision for things that were going to happen in the future. And what I love is it's here. The future is here. And we're doing the things that we've said, we ought to do these things together. We're doing them. I love that. That is so exciting.
Yeah. It is. And we are doing that. And we had been pushing over that, I think, discussing a couple of ideas since a long time. And especially with the Hedera token service, it's perfect to get tokenization done. And that's where our visions align with the vision of LCX to tokenize everything, giving the legal framework and infrastructure which we built, and then giving your kind of technology infrastructure which you've built with Hedera token service. I think a lot of people mentioned it in the chat already. Wouldn't this be a perfect match? And we agree. So that's why there is a major announcement and partnership announcement coming out tomorrow. So at around tomorrow, the same time, everything will be published. But we are teasing it and announcing it already today. And you can read all about this tomorrow in the news. And besides that, the HBAR token will be listed at LCX Exchange. So we've done the whole integration, running our own nodes and working with your technical team. But even more important, it's about digital securities, security tokens, and the interaction of the Liechtenstein protocol, which we've built as a new standard for security tokens, and the Hedera token service and the whole Hedera Hashgraph infrastructure. I think that's super, super exciting.
I'm excited too. It is exciting.
Perfect. So for our community, we'll wrap this up. Leemon, one more question. In terms of the partnership with LCX, why is it important for you to work with a company like LCX?
As I said before, that's where all the value is. We're just plumbing. We don't do anything. We just enable other people to do things. And that is why it is so exciting to be working with you.
Perfect. So I think for the detailed news, you have to be patient another 24 hours, and then we'll publish all the details. You will find it at Hedera's blog and website. You'll find it at LCX website, and then we'll also hand it out to a couple of journalists. So you're free to share the news. This will be very, very exciting. Thanks for tuning in for this special LCX Insights Live. It was an honor having you here on the show, Leemon.
Thank you. It was a privilege to be here with you. And thank you, everyone, for joining us. I really appreciate your presence. Thanks a lot.
Thanks. Goodbye.
This is LCX Insights Live. For more insights, please visit lcx.com/insights and follow us on Twitter at LCX. Onwards and upwards.